This is how a typical rookie trader trades a Bollinger Band breakout. He sees the Bollinger Band tightens and gets all excited. Well, that's because he learns all about the Bollinger Band squeeze from a YouTube video teaching him to trade the breakout. Now guess what happens? He buys into a fake breakout and price goes his direction just a couple of pips before reversing and taking him out. This is unfortunately a very common mistake, one that the rookie trader doesn't even know. And the sad thing is that he doesn't even know what's wrong with his approach. In fact, do you want to try to guess why this is a mistake? A quick hint for you, it has to do with understanding the price action context. If you do not understand the right price action context that is suitable for a Bollinger Band squeeze, you will lose money. That's something that you don't want, so it's very important that you listen closely and watch this video till the end so that you don't lose your hard-earned money. In this video, I will show you how to trade a Bollinger Band breakout correctly. I will first briefly cover what a Bollinger Band is and how to identify a Bollinger Band squeeze. Just in case you are new to trading and don't yet know about the Bollinger Bands. I will then show you how to implement a small tweak to your Bollinger Band setups to improve your win rate drastically. With this small tweak, you will then be able to input a tighter stop loss, and that means you can enhance your risk to reward ratio. Lastly, I will wrap up this video with some charts showing you examples of how to do it correctly. There's a lot of value packed in this video, so I hope you are ready. Sounds good? Before I move on, please do me a small favor and hit that thumbs up button. It helps support the channel, and you can see that a lot of work goes into producing this video. So definitely appreciate it if you could take 2 seconds of your time to like this video and subscribe to the channel if you're new. My team also runs a free Telegram group where we send out our signals in real time. It is free and you will be able to see how we trade the markets. You are missing out a great ton of value if you have not yet joined the group. Now I will leave a link to it in the description down below, so make sure you join us. So quickly, this is how a Bollinger Band looks like. It consists of a moving average and two bands, the upper and lower band. The upper and lower band plots the distance based on the number of standard deviations away from the mean, which is determined by the moving average. If you study statistics, you will know the importance of a 2 or 3 standard deviation away from the mean. And that's why many strategies use a double Bollinger Band. Anyway, that's not too important in this video. We will be using a 20 period moving average and a 2 standard deviation setting, which is actually the default setting for this video. So let's move on to how a Bollinger Band squeeze looks like. Right here, this is a high probability Bollinger Band squeeze. As you can see, the concept is not that difficult to understand. As the name suggests, a Bollinger Band squeeze is when you see the Bollinger Band tightening up. This indicates that the market is consolidating. Think of it like a compressed spring. Once it's released, it springs out and we get a breakout. Traditionally, how most traders trade it is to take the breakout once price breaks out of the upper or lower band. Some use a market order and insist that price must close above or below the band. Others simply use a stop loss that automatically triggers when price trades above or below the band. So hopefully, now you understand what a Bollinger Band is and what a Bollinger Band squeeze is. Now, I want to show you a small tweak that you must make when trading the Bollinger Band squeeze. You see, most traders will take this knowledge and start trading every single Bollinger Band squeeze they see. So they end up losing money and conclude that this is all crap. As I mentioned earlier, you need to pay attention to the price action context. Without this, a Bollinger Band squeeze setup is low probability. So what we need to see is price making a series of engulfing patterns before the breakout. Now this is very important because it indicates that there is accumulation. And when there is accumulation, price breaks out explosively after that. In case you do not know what an engulfing pattern looks like, it's simple really. It's where a candle engulfs the previous candle. I have an illustration for you right here, and you can see that it isn't that difficult to recognize it. So right here in this Bollinger Band squeeze, we see a series of bullish engulfing patterns just before the breakout. This is a high probability Bollinger Band squeeze setup. Now the beauty of watching for this is that we can also use a tighter stop loss when price breaks out. Traditionally, people place their stop loss at the other end of the band. So if they bought once price breaks out of the upper band, then they will place their stop loss below the lower band. As you can see in this case, the stop loss is quite wide. Now, we can do better than that. We can set in our stop loss just below the engulfing pattern by watching for a series of engulfing patterns. Because if price violates the engulfing pattern, then it's probably not a good idea to be in a trade. Just look at how tight your stop loss becomes. This allows you to trade with a bigger position size and make more money when price moves in your predicted direction. Let me provide you with another example to illustrate the entire process. This time, I will show you a bearish scenario. Right here, we see that the bands have been tightening and it looks like a Bollinger Band squeeze. Zooming in, if you were to look at the price action, you should be able to spot a series of bearish engulfing patterns. This is the anatomy of a high probability Bollinger Band squeeze. When price finally breaks the lower band, we can take the trade via a market entry order. Our stop loss goes above the recent bearish engulfing candle rather than the upper Bollinger Band. As for trade management, that's an entire video on its own, and I have previously uploaded many videos on maximizing your trading profits. I won't cover that in this video, but I will leave a link to those videos at the top right corner and at the end screen of this video. If you need a hard and fast rule, I recommend using a fixed risk to reward of 1:3. Suppose that your stop loss is 30 pips, then in this case, you will shoot for a target of 90 pips. It's simple and easy and doesn't require experience in managing the trade. In fact, if I do a quick comparison between placing your stop loss at the opposite band and just above the bearish engulfing candle, you can see that the risk to reward is drastically different. So gunning for a risk to reward of 1:3 is not that difficult. And not to mention that the traditional way is lower probability as well. But if you were to follow the small tweak that I taught you in this video, you can see that your risk to reward would be way more attractive. And hey, this is higher probability as well. Pretty sweet, right? Not just higher probability, but it also makes you more money. This is the power of looking for a series of engulfing candlestick patterns. So summing up this video, to trade a Bollinger Band breakout correctly, you need to understand the price action context. You should not simply take a trade whenever you see price breaking out of the Bollinger Band. To get the highest probability Bollinger Band setups, you need to watch for a series of engulfing patterns. Your stop loss goes above or below the recent engulfing pattern, depending on whether you are buying or selling. If you are buying, then your stop loss goes below the recent bullish engulfing pattern. And of course, if you are selling, then your stop loss goes above the recent bearish engulfing pattern. That's it for this video. I hope you got a ton of value. Make sure to subscribe to the channel because we upload new videos every single week. Don't forget to join us in our free Telegram channel via the link in the description down below. As promised, I will leave a link to the video on how to maximize your profits. So definitely check that out next if you want to get the most out of this Bollinger Band breakout strategy. Thanks for watching, and I'll catch you in the next video.